Meantime, the Commonwealth Bank has reported a better than expected profit in the half year thanks to falling loan impairment expenses and growth in the bank's core business. Joining me now is our business reporter, Ed Boyd. And CommBank lifted its profit 2% to $5.1 billion. If the banks are strong, the economies are strong, right?
Banks are strong, the economies are strong. It's always a good sense check of the economy. CBA's result, it's obviously the biggest bank in Australia. It's the biggest company on Australia's stock market by quite a large margin. It overtook BHP last year. CBA shares this morning before they began trading were at $162. Obviously, lots of Australians with super funds would have shares in Commonwealth Bank. But let's have a quick look at the results. We should have a chart showing their half year. Revenue was up to about $14 billion. The cash profit up 2% to $5.13 billion, which was slightly better than what the market was expecting. The net interest margin was up 2 basis points to just over 2%. And the interim dividend was lifted by 10 cents per share up to $2.25. Matt Commons, the Chief Executive of Commonwealth Bank, always interested to hear what he has to say about the economy and about customers. He did say there are obviously a lot of customers that are under pressure right now due to high interest rates, but with the Reserve Bank expected to cut next week, that's obviously going to help both business and consumer customers, not just at CBA, but across the whole country, and help with those cost of living pressures. Here's Matt Commons speaking in a corporate video.
The past 4 years have been challenging for households, with prices up 20%. There are some risks around the outlook. However, there are reasons for optimism in the Australian economy, with near record low unemployment and real disposable incomes starting to lift. We know many households are looking forward to lower rates. Continued effort is required to get the underlying inflation rate sustainably into the target band.
That's a corporate video from Matt Commons put out by CBA this morning. But Ross Greenwood, the business editor, will be speaking to Matt a little bit later today, Laura.
OK, we look forward to that. Shifting topics now, energy generator AGL profit has slumped. Why?
It's down basically because they had such a good year last year. When your profits are really high, next year if you don't make as much money, obviously it's going to fall. We should have a little chart showing AGL's results. Obviously, they're one of the oldest companies in Australia. Their revenue up 15%, so they brought a lot more money through their books, but costs went up as well. Net profit was down about 83% to just under 100 million. The underlying profit is the one the market looks at, which strips out one-off costs. That was about a bit under $400 million. The dividend was lower by 3 cents, down to 26 cents per share. AGL is obviously a very large company on our market as well. Big energy retailer and power generator. They've obviously had the big shift in strategy in the past couple of years as Mike Cannon-Brookes, the tech billionaire, has bought into the company and owns is the major shareholder. Mm-hmm. They're now much more focused on renewables and batteries and things like that. So the chief executive is Damien Nix. I'll be speaking to him, Laura, a bit later today to get a full understanding of why the profit has come down so much compared to a year ago.
OK, we look forward to that too, Ed. Thank you.